down, or there are issues with the exterior walls, and if your building has a swimming pool or gym, the fees can easily go above 8,000, even over 10,000. That's very common. And there's an even bigger issue. Over 75% of people in the city center are renters, plus a bunch of short-term Airbnb tenants. The wear and tear these people cause to the building is beyond what you can imagine. After a few years, the building ages rapidly and fees rise. You think you're buying positive cash flow, but it's a brief honeymoon. When selling, it likely depreciated. Third, stagnant prices for 10 years. This is fatal. Core Logic says Melbourne's median apartment price is $410,000. What happened last year? It dropped by 2.38%. And one-bedroom apartments fared the worst, dropping by 2.5%. And banks aren't stupid either. Several, or rather more and more of them, have already listed the CBD as a high-density restricted postcode. What does this mean? It means the maximum loan you can get is 70%, and it's quite common for the bank's valuation to be 20% to 30% lower than the price you paid. In other words, if you buy a property for $500,000, the bank will at most value it at $400,000 and will only lend you up to 70% of that. So you'll need to prepare almost half as your down payment. Think about it. Why do you think banks are doing this? And why are you so stubborn about buying an apartment? If you want to sell, it's hard to get rid of it without losing at least $100,000, right? After saying all this, I'm really not trying to badmouth Melbourne, right? I've lived in Melbourne for more than 10 years. And although KPMG predicts that by 2026 Melbourne apartments overall will increase by 7.11%, ranking first in Australia except for Darwin, what's driving this number are the low-density apartments in mature areas outside the middle and outer rings, not those pigeonhole-like high-density towers in the CBD, which have nothing to do with this growth. Melbourne is still, in our view, one of the most promising cities in Australia. But the problem has never been the city itself. It's about which suburb and what type of property you put your money into within that city. With the same budget, if you choose a different area or a different strategy, the outcome can be worlds apart.